the CIO of Progress India Opportunities Fund, joins in now. Vikas, hi, thank you for joining us on the show. What's your view on the recent emerging market underperformance versus developed markets after the Trump win?
Post-Trump acceptance speech and several pronouncements after the election, a lot of asset classes have been thrown into disarray. You have had a very strong U.S. equities market. The global bond markets have sold off, and U.S. dollar has strengthened. And emerging markets have in general sold off quite aggressively. This is mainly because of the expectation that U.S. markets will be positive, U.S. economy will be positively buoyed by the fiscal spending and tax cut plans which are expansionary in nature in terms of President-elect Trump's economic policy plans. But the world has still not seen exactly how this will play out. Given the fact that the choice of team candidates seemingly suggests a more hardliner stance by President-elect Trump, and there's always an element of unpredictability with the President-elect. So we have to still wait and see how this will all play out in terms of developed markets.
Vikas, hi, good afternoon. In that context, what's your view on India? Because we have seen even bigger underperformance for India.
Yeah, India definitely offers at the moment one of the most compelling investment opportunities in Asia and in terms of other emerging economies. India, the biggest thing about India is the demographics. Over 60% of the population is below 29 years of age. That means that a big mass of people are coming into their working age. Given their reasonable education levels, reasonable skill sets, their enterprising nature, we think this population will be earning these incomes and will be spending this income on consumer discretionary items for a fairly long period of time. And that essentially is the crux of how we are looking at investments in India. If you look at the Indian economic growth over the last few years, it has been a growth which has been led increasingly by consumption, while industrial and the capex and infrastructure spending has been much limited. And if the current policy stance helps to revive capex and infrastructure spending, that's only going to buoy the economic growth further. So that's why we continue to like India.
Yeah, but because the problem is post this demonetization, we have seen a bit of a demand destruction or the fear of demand destruction. Your thoughts on that?
First of all, what Prime Minister Modi has done with demonetization is obviously very commendable. But it's also very important to note that the very fact that millions of people across India, despite the hardships, despite the inconvenience, have gone out and accepted the move without any sort of major protest or major violence, that speaks volume about the intellectual maturity or coming of age of the current Indian demographics, and that's a huge positive. Now, let's look at from an economic point of view. Obviously, in the short term, yes, demonetization has led to some disruption in consumption, mainly because of supply side disruptions. But that consumption at the mass scale is it's a matter of weeks, if not matter of days, when that consumption will come back very quickly. It's the consumption at the high end, especially in terms of high-end property, in terms of high-end discretionary consumer items, in terms of jewelry, that can take a serious hit. But and I'm sure a lot of your market pundits must have mentioned that economic growth would suffer. One has to estimate how big the capex and the infrastructure spending plans, how much of that has been thrown into disarray, what is the kind of how long will that take to come to fruition? How much is the postponement, and what's the impact on economy on that? That is something which one has to still understand.
Okay, that's interesting. I believe you're very bullish on NBFCs despite demonetization. What is your rationale?
We like one aspect of the finance sector, and that's the microfinance sector, not the general NBFC sector, but one aspect, microfinance sector. Microfinance sector, if you look at it, and let me just very quickly explain to you the dynamics of this sector. So at the moment, basically an average ticket size for a microfinance sector is roughly around 12,000 to 13,000 rupees. And this sector, this lending is targeted towards a mass of population which earns annual incomes between 30 to 60,000 rupees. Now, if you look at the aggregate of the number of players which address and the number of customers which are there in the microfinance sector, you have roughly between 15 to 18 million customers being targeted at the moment, while the pool size is roughly 250 million people, which are in that bracket who earn between 30 and 60,000 rupees per annum. So the potential is so large. And again, it's a sector where you need direct relationships, direct knowledge of the customer segment. So the existing well-entrenched players who have been doing a good job over the last so many years will continue to actually grow at a very rapid pace and reap the benefits of this sector. And that's why we like the microfinance sector.
Okay, the market, by the way, is putting some more weight now. 8,001 is what we have on the index, on the Nifty that is, and the Bank Nifty at about 18,550. So looking quite strong. Because before we let you go, any other sector that you're bullish on?
We also like the healthcare sector. Obviously, healthcare sector, which includes the pharmaceutical sector, has gone through a bit of consolidation over the last 12 to 18 months. Now, there are two elements of this business. One is the domestic side, where most of the companies and the market itself is growing in double digits. Essentially, there is a steady growth, and it's a volume-led growth, less of a price-led growth, but that's increasingly coming into play as health insurance becomes a bigger force in the domestic market. Now, then there is the export sector, which is primarily aimed at the US market. Now, most of the pharmaceutical players, the generic makers, have gone through a consolidation because of the FDA restrictions or FDA comments in the last 12 to 18 months on this sector, where they've asked for better compliance norms, better quality control norms. Now, that we see as a very big positive, because going forward, if you see, most of these players would have addressed their quality control issues, their compliance related issues, and they would have actually strengthened their good manufacturing practices. And that would lead only to bigger growth going forward in this segment.
Okay, Vikas, thanks a lot for your time today. That's the view from Vikas Gattani, CIO of